Good evening, Nick Inman here from VolumeProfileTrader.com on Monday, April 30th, and looking at the S&P here. Today was really a day, really the last couple of days has been a day where there's been limited opportunity. There's been opportunity during the day, intraday, in terms of a day trade, but from that, it's really been slim pickings, and if you didn't get involved in the market on either the 24th or 25th, you kind of missed your opportunity, unless if you got it on the 26th, somewhere back in the 25th range. So I think as far as an opportunity in the market, it's pretty limited, and this is the way I see it. If you're an S&P trader, then obviously this is the chart you're looking at. But if you trade stocks, for example, stocks in the S&P 500, then you're going to be looking at the S&P, and then you're going to be looking at your stock. And if the stock that you're holding or trading is making new highs or has made a new high relative to what happened at the beginning of April, then your stock is still in good shape, and there's really no reason to sell. Now, I do have an argument for that, and that would be, well, the market could be topping out, and you could be in a position where your stock is creating a divergence, which means, generally speaking, divergences are, people talking about them with technical indicators, or maybe, congruent markets, or markets that, for example, like the S&P and then the Russell 2000. If the Russell 2000, or if the S&P made a new high but the Russell 2000 didn't, or if the S&P made a new low but the Russell 2000 didn't, or vice versa, that is something that investors look at, and they're trying to get clues. How strong is this rally? How good of a job is it doing? Or let's say the market's going higher. How good of a job is it doing of going higher? And if you ask that question with the current market, you're looking at the last week, and you're saying, well, it's doing a pretty good job of going higher. That's true, but in context of the last 2 months, or say once it got into this current range, so the beginning of March, it hasn't really done a great job of going higher. It pushed higher, did a good job at the beginning of this range, and then what happened? It failed. So all of a sudden, that, I guess you could say, quote, a good job, unquote, of going higher was completely, for lack of a better term, slapped in the face, and you saw a retracement back to the bottom of that congestion zone. Now, that congestion zone, the bottom end of that, it was a good buying opportunity, and the market then once again pushed higher, whether it was a couple days or what we see now, about a week so of trading. The market is looking for value, or I should say establishing value, and right now value is in this range. At the extremes of this range, it's being rejected and being pushed to, the top end or the bottom end. And you need to be aware of that, and you need to be accustomed to changing your market strategies. This isn't a trending market anymore. What we have is a sideways market. Is there a potential for a continuation to the upside? Sure. But so far, and I'm going to zoom in more here, when it's gotten to the top end of this range, which has happened 4 times, has it been right to be a buyer or seller? And that should be a pretty easy answer. It was a seller. Only 1 time did it close in this range that I highlighted, and the next day after that close was a complete rejection of that range. So that's something to note. And also, when we came back to test that range, we pushed lower and continued lower until we got back down to the bottom end of the range. So going into what was the support zone every time, which was looks like 6 trading sessions, it got down to this support zone which I drew, and every time it was right to be a buyer. So what basically you had, a breakout from this range, a pullback, a breakout, a pullback, and then finally a breakout. And not only was it a breakout from this range, but if I can draw it like this also, I'm just going to look at basically the selling tails that we had from this trading range, and we broke out from that range, and now that range has become a little bit of support. So as a trader, you're looking for, well, is this range going to hold and we're going to push that back up to the top end of the bigger range, or is this range, I'm going to zoom back out a little bit, is this support, or what was resistance now support, is that going to hold, or is it going to fail and we're going to push back towards the bottom end of this bigger range? And it will mean a few things regardless. And let's say, let's do a hypothesis. Let's say the market continues higher from this range. Let's say it just consolidates for a couple days and then pushes higher, pushes up towards this 14.19 level, or this resistance zone. What you're going to see is buyers should become more aggressive on the dip, and they should be looking to buy potentially in the middle of this range with expectations of a higher low. So what you would have would be a potential, okay, trades up, and let's say there's a little bit of resistance, and trades off of these levels again. What you would have is the potential for a double top, but longer term, what you have is a higher low, a successful test of the bottom end of the channel, and a continuation off that range, and therefore any type of pullback, buyers would be looking to buy it because they want to stick with the trend and look for new highs in the market. But if it rolls over from these levels after a couple days of consolidation or whatever the case may be, and pushes back to the bottom end of this range, you have people talking about a lower high, and then they would look for the market to roll over more. How would they confirm that? With a break of this support level. So right now, from the market standpoint, it's hard to give my judgment as far as which way the market's going to go. There's really no telling right now, and that's one reason why my portfolio is holding a lot of cash. I'm sticking with what's working, and I'm picking a few trades here and there, but most of my trades are short term, and short term is, well, this recent week, and also just intraday moves, looking for a $5 move in the gold market or a $3 move in the S&Ps, because that's really the way I trade. That's all the market is offering me. And you take what the market gives you, and if it's not giving you anything you like or you can trade, then don't trade it and just wait. There's nothing wrong with that, because if you can make 10 let's say 10 to 15% on your portfolio and a move like this, there will be a move like that, and you will have opportunities like that multiple times. Then you learn what it takes to trade these bounces here, these 3 or 4 day bounces. Therefore you continue to add to your arsenal, and you'll give yourself an opportunity to profit on any given month in the market. So what I would like to do is break this down a little more and just look at a 20-day, 30-minute chart. And what I'm really going to focus on is the last few days. Okay, so what I did was these blue lines bracket in the support resistance on the daily chart. You can see it on the bottom and the top. And what I did here was, you can see the gray rectangles. The same concept to the sorry, I lost track of what I was saying, but back onto it. What I did was break it down to a 30-minute chart, and I took the same concept, the extremes, these blue lines on the lower end. You take the same idea with the 30-minute chart or an hour chart or whatever the case may be, whatever time frame works for you, and you look at these buying and selling tails, where is there, where are the high and lows of the day, and how does the market react? How does the market react to those levels? So let me give you an example, and it'll be an example of the most recent price action. So back on Friday, and you can see this is Friday, going into the pit session at 9:30. Let's see right here. This was Friday, and then we had our pit session. Well, in the morning, we had a big reversal, a 30-minute reversal, which, I don't put too much into the overnights, just, if we see range extension from the prior day or not. But what we could see is basically a big rejection off of these highs and a push to the downside. So what I would do for that day, for Friday, is I would mark off, okay, from that 30-minute bar, compared to all of the other 30-minute bars, and I'm going to zoom in a little more, and this may be a little too much, but I think you'll get the point. Okay, we have a wick, which is, these big lines that go away from the open and close of any given candle. And these wicks, for example, on the day, you had the big reversal from the 9 o'clock bar to the 9:30. Well, I take the second highest wick from that level, so 401.75, which was 2 bars prior, and no price action got higher than that in any other bar besides this 9 o'clock bar. And then, so I take that extreme, and then I take the high, and I bracket it, and that tells me basically that there's rejection there, a 30-minute bar of complete rejection, and that is your resistance zone. And from there, what do? We trade it down and push lower, and you're looking at when we got back into that level, well, what happened? Was it right to be a buyer or seller in that range? Once again, it was right to be a seller. And, these are ways to make money. And, just, so take that concept and let's bring it out a little more. And you can see, for 2 days, it was right to be a seller. Now, it wasn't, it's not perfect math, is what I'm trying to say. And you can see it breached. We had a successful close in that bar, or in this bracket, on, looks like Sunday night, and even Monday morning, or Monday morning twice. But generally speaking, it goes right to be a seller. So where I'm trying to get is, I'll take the high from Thursday, and you can see it was the same concept. You take basically the prior bars, not the prior bars, the second bar's highest, price level, and in this circumstance, it was 1397.50. Then you connect it with the price level of the high of that day, and you see complete rejection. What do we get from there? We got a sell-off, and successful trade to the downside. So let me give you an example of a trade that goes the other way, and here we go. Back at 8 o'clock, and you can see just from drawing a rectangle, this is drawn from zoomed out, but 1382.25, you can see that was the next low compared to the wick, and then the actual low. And what do we get there? We got to bounce off. Well, of course this looks good in hindsight, but it also is valuable support resistance. So let's go to Friday's intraday low. Same concept, the wick of the second bar's low, and then the actual low of the day. And you can see it was this 1388 to 13, let's see, let me get the number, 1386.50 or so. Well, where did we get on today's intraday low? It was less than or let's say 1 point off of that level, and then we got a reversal. So what are you looking for when we get down to these levels? You're not looking for let me say that again. You're looking for a potential reversal, just like you were against this resistance, just like on these highs from Thursday. It was support on, let's see, it was resistance a little bit Friday morning. We broke above it. It was support for a little. We broke below it. It was resistance. And then we bounced in the range, broke out, tested the top end of the range, came back, found support. Sunday morning, found support. Sunday night, Monday morning, found support, broke down, resistance. Where do we go to? The next the next extreme. So what I'm trying to do is incorporate, using price levels like this with volume and trying to trade the most important levels. So you can see, based off of the last week's volume profile chart, if I connect more, the extreme of this high volume range, 1381, to say 1389.25, this ends up being a pretty good buying opportunity at 14:30 in the afternoon. Now, remember, this is the type of trade that you get into, and your expectations are moved back up to, your target, I should say, is up to the 1397, 1398 level, and you kind of go from there. So really, instead of just going through the market and trying to find names of what's working or what could work, what could be a good idea, I think it's more important to teach what you should be looking out for as a trader. So one thing I just want to point out, Chesapeake Energy, this is a name that I recommended. I actually sent out a note this morning. The 19 by 20 call spreads, I wasn't around today, but you probably could have picked them up for around 25 cents. I don't know what the weeklies were trading. But this rallied, it was down at one point during the day, and then it rallied 4%. So it was plenty of opportunity. Remember, earnings come out tomorrow, and that spread should be trading for close to, I think it should be up like 25% or something. What I would do is I would take 75% of that position off. So essentially, you have 25% gains. You take 75% of the position off. So let's say you have let's make it easy. 12 contracts. You take 75% off. So that would be what? 9 contracts or 9 spreads, and that leaves you with 3. So essentially, you're risking nothing, and you can still make 3 times your money on those 3 spreads. So instead of making a potential 300%, with almost rolling the dice on this Chesapeake idea, you would be securing, at worst case scenario, a break even, and then the potential to make 50% on that entire spread, like the equivalent of holding the 12 contracts, so still not too bad. So just an idea to manage your risk. The other thing I want to talk about is gold. I like gold, and I think it continues to work. I love the reversal today. I'm holding some GLD call spreads. I'm looking to roll them up, and I think this, if you don't own gold, I think this is a good opportunity to buy some. Put your stop under 156, and if you get stopped out, that's fine. You're not really putting on too much risk right here, even if you're buying right here. But I think the overall macro risk warrants holding gold, and I think that's why gold's been holding up so much. Just looking at the euro, it did nothing today. The Aussie dollar, it looks like it did nothing, although they have rate hikes or Fed meeting, I don't know, tonight. Not a big currency trader, so I'm not really familiar. What I care most about is the dollar, and that stabilized relative to where it closed on Friday. So anyways, take care, have a good night. I hope this helped, and I hope you can use it to become a better trader.